Welcome to TMS Insights for the month of March. It's Ben Clark and Jeremy Hook with you again to bring you what was a very good month in February, and we've led to an interesting March certainly, but Ben up 4.5% the market in February. March has brought a few macro wins to the equation. So people are worried probably a bit about China, a bit about Crimea.
Crimea.
But should we be? I mean, generally speaking, these often present weaknesses in markets, macro events, which often turn out to be opportunities.
Yeah, absolutely. And I think, one thing we try and focus on is what a company's earning profile is going to look like in coming years, as opposed to what's going on in Crimea or in China, etc., etc., etc. And I think that really, to us, is where opportunities, as you said, can come up. But also trying to take out some of the ongoing noise and the fear and the greed that occurs in markets on macro basis, and focusing in on specific companies and how they're performing. China, I would say, is probably one that does need to be closely watched, although it's such an economy with such a lack of transparency that I think we will always never really know what the true state on the ground in China is. We do have a relatively low exposure to resources, which is the obvious sort of area that will be hit if a perceived slowdown does continue.
That's right. And I think the other thing too is people often confuse China as representing the whole of the Asian opportunity set. And that's just not true. We think there's great opportunities in Malaysia, Vietnam, Korea, Singapore as well. So these are countries that are of real interest, and Asia as a whole offers a lot for outbound Australian companies.
Definitely.
Doing the right thing. So opportunity more than anything else.
And
it comes back to then to discuss really what happened in reporting season. And we know ultimately it was good and it drove the market higher. But for 80% of companies that reported in the season to meet or exceed expectations, we certainly could say we're pleased.
Absolutely. And look, portfolios, I think, by and large, have done very well during earnings season. And I think that is a reflection of the fact that a lot of the stocks that we've held, once the actual fundamentals have been delivered, so how is this company actually going, we've seen some pretty strong share price reactions on the upside in pretty much most of the sort of stocks that we own. And look, I think, most of the market commentators are calling this the best earnings season in 6 years. Revenue growth is still sluggish, you'd have to say, but it was certainly one where expectations were delivered and even exceeded in some cases. And the outlook appears to be increasingly sort of optimistic with these low rates and the picking up economy, particularly on the East Coast that we're seeing.
And where that becomes relevant, the 2 points together, is that March has started a bit softer because of these macro events. And that's just providing a bit of softness in some prices which had run up after good results. We've spoken twice, in these sessions about car sales. Had a fantastic run up after good numbers. Now it's pulled back a little bit. Still very much keen on stocks of that ilk. So please be in touch with us and we can have a look at some of the opportunities that are coming up.
And of course we've got a lot of stocks going ex-dividend at the moment. So you will see some share price falls. As example, Woolworths went ex-dividend on Monday, 65 cents fully franked, and you will see a bit of drop in some of those stocks as a result of that.
And that explains part of the weakness in the market overall. Plenty of dividends still to come into portfolios. Now, we're always looking out for interesting opportunities, and particularly in the yielding space and where we can find good low-risk kinds of investments. One that we've actually highlighted in the last little while, one we think is a good opportunity, is Investra, which has got quite an interesting situation on at the moment, Ben.
Well, it's under a takeover bid by its largest shareholder, Australian Pipeline Trust. Investra is an owner of gas pipelines, and as is APA, a much larger owner of gas pipelines, a very well-run infrastructure utility stock. APA owns 33% of Investra, has owned that stake for many years, and has launched a formal bid quite a while ago now. I think it's about 6 to 8 months ago that this has been dragging on for. However, there was some news in the last couple of weeks where the independent directors of Investra have now recommended that bid to their shareholders on the basis that the independent expert has said it's fair and reasonable. There is still some uncertainty as to the bid, given the second largest shareholder of Investra, CKI, The directors that it has on the board voted against recommending the bid. However, CKI hasn't said how they'll recommend or how they'll vote on this upcoming bid. And I think it's fair to say that we see a lot of logic in the APA and Investra tie-up in terms of synergies. We feel that APA knows these assets very well and they're probably not sort of overpaying for them. And given APA had a great result in the recent earnings season, the share price is strong and it's a scrip deal, this could be a good sort of cheaper entry point into APA buying through Investra.
Yeah, that's right. So APA is the dominant, best managed operator in the pipeline space, an area which we think's got very good fundamentals going forward, greater gas demand into the future and a very important series of key monopolistic assets. So if you buy into Investor at the moment, trading at around $1.14, you're actually getting into APA, which is trading at about $6.50, at just under $6 if the scrip bid goes through on the exchange of 0.1919 shares per Investor share. Now, that gives you a yield of around about 6% with the next APA dividend to come up in June. So it is certainly a high quality, lower risk series of assets that you can buy into. And in a market which is challenged for yield, we think this is a very good way to go to it. So please get in touch with us if you've got any questions about that one.
I guess the only thing we should quickly point out is if the deal were to totally fall over, you will end up with Investra Shares, which is a company that's been very well managed in its own right, has delivered good income returns to shareholders, and we would be happy to be in that situation. There is also the chance that APA sweetens the deal and you actually get into the stock at a cheaper level because they have not declared their offer as final. So there is still room for them to increase their offer to get the second largest shareholder across the line.
That's it. So a few things that may play out in the short term, but we've got a long-term focus on this one as something of real appeal. Thanks for being with us today. We'll be back again next month with another TMS Insights.